So today we are diving into one of the most profitable and also most misunderstood strategies in the entire world of trading, which is the support and resistance breakout strategy. And I have updated it for 2026 in this video. Because let's be honest, every trader loves breakouts, but 70% of traders still get trapped in fake breakouts. So they end up buying the top or selling the bottom. And so more than 90% of traders, especially beginners, end up losing all their accounts. But not you, especially not after watching this video. Because in the next few minutes, I'm going to show you how to spot real breakouts before they happen, the real reason why most breakout traders fail, step-by-step rules for confirming breakouts, how smart money manipulates false breakouts, and the exact chart examples you can copy today. And trust me, if you stick till the end, I'll show you a secret that will completely change the way you trade support and resistance forever. So without wasting time, I'm Rikia and you're welcome to Trade with Ricks, where I help traders go from confused beginners to confident profit makers. If you're new here and you want to learn more trading tips, strategies, and get weekly market insights, then don't forget to subscribe and turn on the notification so that you get notified whenever I post any new updates. And you can also give a thumbs up to like and share and help this video get at least 1,000 likes. So without further ado, let's jump in. Let's start with what a breakout really is. Most traders think a breakout is simply when price moves above resistance or below support, but that's not the full story. A real breakout is when price closes above resistance, holds above it, and shows confirmation of bigger volume plus momentum. But on the other hand, a false breakout is when price pokes out above resistance for a few seconds, just enough to trigger stop loss orders, grab liquidity, and then reverses hard in the opposite direction. And what most traders don't know is that breakouts are engineered. They are designed to trap early entries. And the big players, the large institutions, use them to collect liquidity before the real move happens. So if you want to catch real breakouts, you must understand that breakouts are not entry signals. Breakouts are information. The real entry after a breakout is the retest. Just hold that thought, we are going in deeper. So here's something nobody tells beginners. Most breakouts fail because of liquidity grabs. Those smart money, they call them the trick trap and frustrate crew. They know where retail traders place their buy stop orders, which is usually right above resistance, and their sell stop orders, which is usually right below support. So what do? They push price just enough to trigger those orders to the level where the price can favor them to enter or exit their positions, then reverses the market. This is why you will always see a sharp spike above resistance, then a quick rejection, then a sudden drop in price, and then you see retail traders crying in the comment section. The key is learning to identify when the breakout is real and when it's just a trap. And that leads us to the powerful 5-step strategy you're about to learn. The first step is to identify clean support and resistance zones. A breakout only works if the level is respected by traders. So you only need breakouts at clear zones and not at random levels. So you look for 1. Where price has touched at least 2 to 3 times. 2. Where price meets strong rejection, meaning that whenever price touches that level, it bounces back and reverses. 3. A tight consolidation forms around the zones. And lastly, volume declines before the breakout. But here's the part most traders skip. The next step is the secret. And that's waiting for the build-up. Before every real breakout happens, price moves into a squeeze pattern and forms this horizontal pattern. This is known as the build-up phase or the consolidation phase. And this usually lasts for a couple of days, some weeks, or months. During the build-up, you'll see higher lows pushing into resistance or lower highs pushing into support. Candles get smaller and volume gets tighter. This is the market loading energy, building momentum for the next big move. If there is no build up, there is no breakout. The third step is to look out for a high volume breakout candle. This is the candle that separates fakeouts from powerful breakouts. So now you want to see a strong breakout candle like the ones in this chart. A candle that has a full body and closes above the resistance zone or below the support zone. You also want to see a spike in volume higher than the previous 10 candles and momentum. You don't want to see candles breaking out with long wick. No. If the breakout candle has a long wick, that's a warning. You might just be looking at a trap. The fourth step is to wait for the retest. This is your real entry point. This is where the money is made. So after the breakout, wait for price to return to the level it broke. That previous resistance becomes new support, and the previous support becomes new resistance. Your goal here is to enter on the retest with a tight stop loss and expect a high reward to risk ratio. This step alone can triple your success rate. And lastly, the fifth step is the confirmation trigger. So you need one extra tool to confirm your breakout entry. There are quite a few tools you can use to confirm breakouts, but it's best to choose one and stick with it. So just like in this chart, you can use either the bullish or bearish engulfing candle, or a volume surge at breakout, or a rejection wick at the retest. You could also use the MACD that shows momentum shift, or a break above or below trend lines, or if RSI breaks out above 70, which signals bullish, or below 30, which signals bearish. The most important thing is not to overcomplicate it. Just pick one and stay consistent. If you want to avoid false breakouts, all you need is to know the red flags so that when you see any of them, that's your signal telling you to stay out of the trade. So here are the red flags. 1. If the breakout candle has a long wick, that is not a strong breakout. 2. If the volume of the breakout candle is low, that's an indication that the breakout may likely be a false breakout. 3. If there's a breakout during low liquidity sessions. 4. If there is no build-up before the move, it will likely result to a low reward to risk ratio. 5. If there's a breakout before a major news, because by the time the news drops, price will most likely move in the opposite direction. Also, if the breakout jumps directly into a higher time frame zone, this traps breakout traders who only watch a single lower time frame. And lastly, if price instantly reverses after stop hunting. So if you see any of this happen, just stay out of the trade. Now let's walk through the support and resistance breakout strategy with some real examples on TradingView. In this first example, the chart shows a clean breakout. So you can see price consolidating around resistance here, forming a rectangular pattern. It's squeezing, tightening up, and holding support and resistance within this range. Also, volume is low during this period of consolidation. So price is making these higher lows and moving up closer to resistance before it eventually broke out above resistance with this bullish engulfing candle with no wick and closed above it. If you look down below the breakout candle, you'll see the volume bar is a big size histogram. This is a strong signal that the breakout is real. The stronger confirmation is in the second bullish candle, opening and closing above the prior candle. And this is a perfect retest entry. So you don't get in yet, only after the retest. The second example shows a false breakout on the Euro-US dollar currency pair. So you have resistance here, and this right here is a false breakout. This gives some of the red flags mentioned earlier. The breakout candle has a long wick, and there is no build-up before the breakout. And all this suggests that the breakout may be false. And look what happened here. Price immediately reversed and moved in the opposite direction downwards. That's a liquidity grab, and this happens in either directions at resistance zones or support zones. The third example is the smart money breakout. In this chart, price broke above resistance with this strong bullish candle closing above it. But the real breakout confirmation is the second breakout candle opening above the prior candle, which is a strong bullish sign, and it signals momentum. So after the breakout, price moved up and came back to retest that resistance before reversing back upwards. So this previous resistance level becomes the new support. At the retest is where you wait for the confirmation signal of the trend continuation before you enter. And see these two pin bar candles at the retest. This is your confirmation signal of a reversal. So this is where you set your entry and a stop loss below it. And this offers you a high reward to risk ratio. And right here is the hack that will put you ahead of 95% of traders. Always check breakout direction on the higher time frame. A breakout on the 5-minute time frame means nothing unless the 1 hour or 4 hour chart agrees and aligns with it. So never trade against a higher time frame structure. That's how you catch only the cleanest and strongest breakout. So that's the support and resistance breakout strategy updated for 2025 and 2026. If you stick to these rules and follow these steps, identifying clean levels, waiting for the squeeze, confirming the breakout, entering on the retest, using one confirmation, and avoiding red flags, you will instantly start avoiding fakeouts and catching real momentum moves. And these same rules can be applied in all markets: stocks, forex, crypto, indices, futures, and even in options trading. If you want me to create a full PDF guide or more examples or a TradingView blueprint, just say the word. Don't forget to like, comment breakout strategy and subscribe for more trading breakdowns. So see you in the next video, and let's all win big in 2025 and beyond.